Well, good afternoon. This is Pat Cruzy with Big Iron Livestock, and I've got special guest Ty Rainforth, a rancher from O'Neill, Nebraska. Him and his father are ranching. Ty's finishing up school, helping Big Iron Livestock this summer, and we welcome Ty to the livestock market wrap up this week. And as always, we have Daryl Holiday with Country Futures out of Frankfort, Kansas, and Daryl. Another exciting week in the markets. And it just seems like we have the same old conversation. As I looked at the USDA reports that came out today at 11, little to no trade in Wyoming, Colorado. So no real big test there. It was steady to down maybe a little bit in Nebraska. South Dakota down 3 at 370 to 377. And in Kansas, mixed trade 3 to 5 higher at 360 to 368. But overall, another good week. Cattle moving throughout the week, and watching the video sales, the cash sales at some of these markets has been just outstanding. New record prices again. As we look at today's trade, we and we'll talk a little bit about this. We closed higher after being down early in the session to coming back after a crazy week last week with some markets down 5 to 6 to 7. This market seems to be pretty resilient, and people want to continue to be in this market. Daryl, what's your thoughts after looking at last week?
Well, I think a couple things that come to mind. The chart you just had there, that show the August feeder. Just look at that and go, "Wow, that was a $6 trading range today." Well, there were, 5 years ago, there were weeks we didn't have a $5 trading range. There were weeks we didn't have a $3 trading range, and we're putting $6 on a trading range in 1 week on August feeders, or in one day.
One
And then
day,
last
yeah.
week's trading range was about $12 to $14, depending on which contract you're looking at. So we're, the volatility is not changed. But I think that, with all of what's gone on, there's two or three things you could have depended on through this whole move that I think are really important. Number one, the futures market wants nothing to do with being, whether it be and I'm mainly talking the fed cattle here, but there's a little bit of that true in the feeder cattle too. But it wants nothing to do with being even near the cash market, very
Yeah.
far away. In other words, August cattle will eventually get right in line with the cash market sometime in the last couple of weeks. But last week, it's interesting to note that the high before we turned around on Thursday was right up there, but right near 234, and we were having cash somewhere about 235 to 36 is where we ended up trading. Well, every time we've got within, something close to the cash, the market sells off. And what's happened is that some of that's caused by the funds who are long the board and go, "Hey, that we're up near the cash. Let's get out. Let's take our money." And it was the end of the month, July 31st. The second one that has always worked is the front end always leads this market higher, or it is bad. In other words, it doesn't fall as much when the market breaks, and that's still true, and really important. And the third factor is the cash has always been well above. We've got this big spread in the cash, and the beef. The beef has struggled from 395 at back balance wholesale choice, but you got to be careful. I always remind people to be careful with those wholesale choice numbers. We don't really know what packers get for beef. We
Yeah.
have numbers, but they're not really there. And overall, the beef demand's been really, really solid, and there's nothing that's really broken, and we're dead into the tighter supplies. We knew. So something that is changing is we're seeing this retention finally just go this summer, spring and summer, and when that occurred, you just pulling cattle. You can see that's showing up in the fed cattle numbers way back when you and I were doing this back in March. I remember having 1 week we talked about where are the cattle for August going to come from with all these placement drops that we're seeing in late February, March, into early April. That's that's your wheat cattle coming off. We just were not seeing the placements, and that's going to show up in August. Sure enough, we're
Yeah.
right in it right now.
Right. Right. Yeah. With last week's kill at 535,000,
Wow.
down 58,000 from a year ago, down 14,000 from a week ago. So they're
Yeah.
definitely starting to fall off here.
Something to point out, though. I mean, that's definitely true. All those are all factual numbers. But one thing that we got to remember that is total cattle field. That's not just fed cattle. And
Yeah.
we've had a big drop off in the non-fed slaughter this year, which you would say, well, that's because we're holding cows. To some extent, that's probably true. But to a large extent is when you're going to always have less cow slaughter when there's fewer cows out there. You just can't slaughter them because they're not there. But
Yeah.
some of it is, I think there will be these, as we like to say it, where we'll have some 9-year-olds that might have 10-year-old birthdays, or 10-year-olds that might end up being 12 years old. And
12-year-olds.
because
Yeah.
calves are worth so much, you tend to hold them a little bit longer. And
Right.
unfortunately, some of them don't make it. And that was a bad investment if that happens, but that's what happens.
Yeah. Right. Right. So some of the reading I was doing this morning, these cattle feeders on the calves they bought 210 days ago, 250 days ago have been a great investment. They've turned pretty good dollars on those as fats, and it seems like the appetite is still good. Do you feel that as you talk to cattle feeders, are they ready to get back in at these types of dollars?
Well, that is really the biggest discussion that we have around the feeder cattle market, because the answer, and my quick reaction is yes, but
Hmm.
you can feel the feeder cattle futures and even maybe a little bit out in the cash market start to have a little bit of weariness to it, in that they've all looked at whether it be their operating lines or their cattle operating notes, going, wow, we've had to expand them. And if I'm going to do anything, they're going to want me to get some price protection and those types of things. So the
Hmm.
money has mounted up dramatically. And I
Yeah.
think that, it's terrible to say this. What 210 days ago, probably when we were buying them, we thought those were high. But if they were high then, well, we're really high now. And I think it's not where they think they can make any money, although that's ultimately the problem. It's that they're going, my goodness sakes, where's the margin there? Where are we going to find this margin? And that's what we're going to do. That's what this market is. That's what markets do. Is they've got to trim it. We've got to ration the beef, and we're probably going to overshoot the target, if you will, with on the feeder cattle at some point. But at this point in time, what keeps them going, besides the fact they've made a lot of money, is feed's cheap. I mean, feed gets cheaper every day, and feed
Yeah.
will be cheaper when you're feeding cattle in October. That feed bill will be cheaper than it is
Cheaper.
today.
Yeah.
And
Right.
so we've got a big corn crop coming on. Forage supplies are very large. We've got plenty of wet cake or byproduct coming out of ethanol plants. You got cottonseed meal. You got everything trying to find a home, and we got less cattle to feed them to. So all of a sudden the price of that's coming down. And so there's all kind of incentive for people to come back and buy the cattle. The only thing I
Yeah.
see negative all is the concern about these dollars are just so high.
Yeah. Right. I did look at some estimations on cost to gain and a closeout on a set of yearlings that we're marketing this week, some 935 5-pound yearlings, 190 days out, and it at a 89 to 85 cent cost to gain. There was a little bit of profit there.
Yeah, yep. Yeah,
So
especially when yeah, that's right. And of course, the difficult side is when you say there's a little bit of profit, if you're using the board futures or whatever you're using on the other end, is that we've had a record basis. We don't even talk about how strong the basis is anymore because we've now gotten used to it, which is probably
right,
the wrong thing to do. But we're going to continue to see that because of what I've mentioned earlier, that the futures want nothing don't want to be near the cash, and they're going to be near the closest they're going to be is to the cash is to the southern market, the Kansas and Texas market, because it's the lowest market.
right.
So my point is the basis has been good everywhere. Can you continue to expect that? In other words, can a Nebraska cattle feeder go, well, if my break even's 228, projected break even, and the board's at 232, do I plan on a 15 over basis like it is now? That's 247. That all works.
Yeah,
But what happens if
right.
you come back to a basis that's 3 to 4 over? It changes a lot. So there's really
Sure.
nothing you can do about the basis. Basis risk is a
Yeah.
reality that's very hard unless you go forward contracting to the packer, and they're not going to even give you close to what the basis ought to be for that. So
Yeah.
that's where the risk is going to be in the risk management side as much as anything is what's the outlook for this basis? And people go, what do you think the outlook is for the basis? I don't see anything changing with it, but I'd also tell you that being $15 to $17 over is unbelievable in Nebraska. But we've been there for a long time, so
Yeah. Right.
it's where it is.
Speaking of forward contracting to these Packers, I would think as tight as things are, and they know it's just getting tighter. Are you seeing more than normal forward contracting where prices are so high that these guys want to eliminate some type of risk and work out that deal with the Packer to go ahead and forward contract these 9 weight steers they got coming in?
Well, I think there's some interest, but I actually think it's going to drop off. I
It
think you'll find
is.
if you go back a year ago, it'll be have been more. In other words, if you're going to sit there and say, "Do you think we have more cattle price for December forward contract for Nov Dece than we did a year ago?" I would say to you, no, we don't have as many, and here's why. Just last week, a major packer took his basis on the forward contract and bumped it from being $1 over to 4 over. That's that's interesting because that'd be the best they've probably ever bid on a forward contract. But that doesn't compare in the north to sitting here thinking you ought to get 12 to 14 over. And
Yeah.
that's why they've lived with these really strong basis levels so long that they're like, we're not going to, we have no interest in pricing them at $4 over. We're not have no interest at all. Even though had you and I talked about this 5 years ago and talked about a 4 over base in November, December, we just said, oh my goodness, you got to grab some of that. And
Yeah.
so that's their experience they've had has also caused them to back off some. Now, if the Packers get aggressive and move up there to $7 or $8 over, then I think you'd see some. So it'll all be on the basis.
Sure.
I think producers are pretty sophisticated now, and they understand basis better than they used to, and understand. Wow, I understand how important that is to me, and now
Right.
they're not. So anyway,
Right, right. Very good. Very good. Well, I wanted to just share with you and the rest of the audience. We've got an outstanding sale with actually closer to 1,900 head of feeders and yearlings. The Edinger Cattle Company, one of the older historical ranches in the central Midwest, is offering up 600 steers and 330 of their yearling heifers, home raised, along with several other families right there in the heart of the Sand Hills. And Ty Rainforth, their family ranches up in northern Nebraska. Ty, you've had a lot of interaction with customers up in that country this summer. What's the feeling you're getting from these folks on these calves that are starting to sell coming up in these summer sales? Are they going to hold them and wean them for a deferred delivery in December, or are there more guys talking about just weaning them or taking them right off the cow and selling them right 1st of October? What are you hearing?
Yeah, well, definitely. If anything, I think they're wanting to hold them longer instead of weaning them and selling them right away. Just because we've had these nice rains all throughout this whole summer, and they started a little late, got going middle of May. We had some nice rains, but that early grass didn't come quite as soon as we wanted. But it's been a great summer and had great rains all summer. So I think if anything, guys are going to want to hold them longer with this extra feed around and. We'll have some nice aftergrass definitely, and yeah, the hay crop's going to be tremendous, I think.
Okay, very good. So in general, with the ample feed stuffs, guys may take advantage of that and put a good wean on these calves. Put them on that meadows that they hay that's coming back, and let them put on some cheap gain there. So
Yep,
yeah,
that's what I think people are going to do. So.
okay.
you know, one thing on that, Ty makes a really good point. I think he's absolutely correct. And what's interesting about that is 2 or 3 years ago, I tried to do a little bit of study to come up with a number, but how many more pounds, what the ratio of the pounds being put on in the what I call the commercial feed yard versus the background or grass or whatever on the animal. And our ratio is going to go way up of pounds put on outside the feedlot, if you will, versus in the feedlot this
Hmm.
year because of all the forage and feed that he was just talking about.
Yeah.
I mean, you can put that on a whole. I'm not saying, well, this is really a sidebar, but that is a real negative for corn. That is not what the corn producers want to hear because
Yeah.
we've already seen our the domestic use has dropped. Now you're finding because of forage, it's all supply for. We don't realize the pent up demand we had for corn in 21, 22, and even 23 when we had forage supplies that were struggling somewhere in this country every year. And
Right.
we just do not see that. I know you and I've talked about, the Wyoming, Montana, that area, but boy, it is not near as big as it was. I mean, the southern plains and western Nebraska are two distinct differences in what we've seen in the last 2 years this year. And as he pointed out, Nebraska worried us early because it was slow getting going. But once they started getting the rain, goodness sakes, they've got every rain they could ever dream to have.
Yeah. Well, there's
So
another point for this thing getting even tighter going into
yes,
October.
exactly.
If they're gonna put them
Mm-hmm.
back on the meadows and take
Yep.
advantage of that grass
Yep.
or supplemental forages they've got,
Yep.
this thing we might not see that seasonal trend to see a little softening coming into October this year, but. Very good. Well, great points, you guys. As always, appreciate your time, Daryl and Ty. It was great to have you on this week
Yep.
on the livestock market wrap up. As always, it's good to gather this information, sit back and think about how it affects your own business and how we can take advantage of the information to help us make better decisions in the upcoming week. So with that, Daryl, we'll let you go. Ty, thank you until we meet again next Monday. You guys have a great week.